Our summary of all my trades today, real quickly. Trade one, of course, we're coming into the markets. They're all looking, it's looking quite bullish over here. Let's see, we came in when everything was riding up high like this on the 10,000 tick chart. You can see in the top left, everything was riding real strong. All the moving averages were pointing up strong. So on the 1,000 tick chart, I noticed that it was heading towards this pivot. So basically, I get in on purely a momentum breakout trade. That's why I got in. It wasn't a trend line break where you see me breaking down here at the bottom, keeping the stop loss under the pivots just as it breaks out. It's already late in the trade, and it was just to get that last little push, and I got that last little push and I got out. Okay, and then I noticed there was another level up here, previous day or previous week's high, and I got in right here. Let's see, this next trade was right here. It's right after that we got in, and we got in with the on a trend line break. This one was a trend line break. Okay, I got in right here in this circle. Stop was under the bottom. It hit 1-to-1. Target, got out. Okay, that was trade two, trend line break. Now, it wasn't quite up to the, and I should have just held this. I don't know what I was thinking. But each trade's got its own goal. And so after that, I realized, hey, it's almost at that pivot level. It's going to, it's going to sweep it, jump back in on this consolidation wedge pattern. And once it breaks up, if it keeps going, hold it. If it starts to pull back, get out. So I got a quick profit on that. That was trade three. Okay, trade four, where's that at? Here's trade three over here, how it got popped up and we got out, and look how far back it dropped. Could have got a trend line break here, but I didn't. I was looking for the momentum trade again, and I don't know why I didn't take that down there. I'm using too many different, I'm using different strategies and testing different things. And we were looking for it to go back over the high and over this pivot. So this was a momentum trade. Once I saw it bouncing off this trend line right here, bouncing off the crossed moving averages in this little consolidation area, I felt confident. When it turned green, spiked over, I got long, and I was targeting that area right up there. I could have stayed in it longer, but I think what happened was I did get back in it, and or no, this is when I made a big mistake. That was trade four. So far, all winners. Then I buy it at the top. What a mistake that was, right? And that literally took me all day, and that's the problem with getting in at the top and not really having a set stop loss, but a dollar amount. My dollar amount risk management went into play on this particular trade. This is not a trade where you have a set stop loss area. This is a trade where you have a set stop loss dollar amount. So my set stop loss risk dollar amount was $100. So I let the one micro contract, I said, okay, I'm going to practice this strategy. Let it pull back as far as I can. And I added right here, right? And then I had two contracts, and I said, this is where I'll put my stop losses in. If I get into trouble, I'll get out. Because at this point, if it would have kept going, I would have hit my minus $100, and I didn't want to do that. So I started getting out. I got out right on one tick. It ticked me out of one of my positions, and then I was still long one. And I added another one right here to get back into two, right? And then I started scaling out. I scaled out up here, and I was holding one, right? And then I added one right here for a quick scalp, and then I added another one, and I started scalping when it popped up right here, right? And so this is how I traded it. And I kept adding and scalping and adding and scalping. I closed that position for a profit right here, and then I just started everything after trade. That was all trade five. I didn't close out of everything until that final close right all the way down here. So all the ads and all the scalping was part of that same trade. And this is what has to be done. This kind of quick scalping, trend line breaking, buy ad. You don't close the position out. I think the closest it got to my $100 was negative 60 something. So it was still within my reason of risk management, depending on your dollar amount risk management. This is the only way you can trade this kind of strategy. You have to have a dollar amount in mind. You have to have measured. I take the measuring tool and I measure how far it is from here down to here. And I look at how many points that is. That's 47 points. Okay, that's going to be about 20, every 20 points on this micro, it drops. is so much money. And I calculate how much is a 100-point drop, and I calculate that's $200, and every 10 points down is 20, and I calculate how much it's going to cost if it falls to a certain pivot level, and I'm okay with that. If I'm okay with it falling down to a certain pivot level, and I know that's only a $40 drop, and I'm going to add when it gets there, then my average price will be planned and strategically set for this area in the middle, and it's all part of a strategy. All right, and I'm working on that. And I'll be talking more about that strategy later. The only way you can add to your position when it's falling is if you've thought out all those different components. But that was the end of my 5th trade. Okay, so I'm combining trendline strategies with other strategies. So up here, I closed trade 5. And then I started going into a bunch of scalping strategies, trendline break strategies, and I traded a whole bunch of times. That was where I closed that position, and then I kept practicing all kinds of different ways. There was 2 break-evens here, 1 loss, 2 break-evens down here, 1 break-even here. I should have stayed in this one. This was a small win, but I've just marked out what it could have been. And these are all 3 win-win-wins right here in this area, 3 different wins and wins. And I just stopped counting it right here, which is not good. I just kept an eye on my P&L for the day and making sure that after commissions I was still positive, and basically I am positive. Let's take a look at that real quick. I did go up a little bit more here, it looks like. After commissions, about $73 positive. So within reason, practicing demo account. And again, I plan on using real money when I can make back what I lost on the $50 demo account. There's no sense in getting a prop firm's evaluation account, paying for that, when I can't prove that I can make money on a demo account. So when this $43,881 gets back up to 50, then I might go buy a prop firm's demo, prop firm's valuation and pass it. But until then, why waste the money? So demo account it is until I can make that back. When I make that back, then we'll be moving into real money prop firm demo evaluations, and then try to go down that path right there. Anyway, those are all the trades as best I can show you today, and all the different strategies, where my thinking is, where I'm at in my daily journal. And we'll see you on the next video, Lord willing. Peace.